So the interconnectedness has increased over the years. If you really see 2010 decoupling story did not play out as much as we wanted, right? We were also impacted and we had undertaken one of the largest cleanup in the banking system in terms of asset quality reviews and recapitalization of the public sector banks. But in the last decade, what we have seen is that the lot of legislative measures, lot of fiscal measures, and also in terms of the strengthening of the banking system, both from a regulatory side as well as the banking management side, has made, I think, India, I can't use the word that they decoupled from the rest of the world, but I think much more, as we mentioned right in the beginning, much more resilient to handle these disruptions.
Mr. Sethi, our re-engagement with global trade, but in a different context. Over the last few years, we are pursuing currently in conversations for more than a dozen trade deals. Some have reached fruition. A big one with the European Union is perhaps around the corner. The United States is work in progress. What does this mean for Indian industry in terms of newer opportunities, and for a lender of your size and stature, how do you intend to support the momentum that this kind of new trade engagement is likely to generate?
So new trade engagements, the way India pursued to have these free trade agreements, to pursue something which is win-win. It's not that, you are giving away something or not giving away at all. That approach has now moved to a more pragmatic approach, that what kind of trade facilitation can be done while using the FTAs is still in the hands of the industries, right? The government only can have a free trade agreement, but how do you use that FTA is up to the industries. And I'm sure that the industry bodies are working on that, and also if you see the free trade agreements also had helped us in terms of geographical diversification of the trade. Not necessarily that you are one particular country or a group of countries, you are highly dependent on export oriented activities. Now we see that much more diversification happening. That is one part. And at the trade finance part, we are the largest trade finance provider to the Indian industries today. Out of my $90 billion overseas book, almost $30 billion, $25 to $27 billion is a trade book, and predominantly funding the Indian corporates accessing the overseas trade finance.
All right, that's a very significant number and point that you have shared with us. You spoke about our high growth rate, 7.5%, inflation at pretty much historic lows. The monetary system has responded, RBI has eased rates, liquidity support has been provided. What's your base case for the cost of capital going forward for pretty much every class of borrowers in India?
So the policy rate cuts, almost 125 basis points in the last 12 to 15 months, has helped the softening of the interest rates on the loan side. Whether it is retail loans or corporate loans. Broadly, I think there is a softening. On the corporate side, there is still, we have a concept of MCLR, right?
Yes.
The marginal cost has not come down as much as we wanted or the industry wants, mainly because I think the cost of deposits have remained more or less sticky. So there is a good growth, as the numbers indicate, that industry level, good credit growth. And deposit growth is slightly lagging, which is putting pressure on banks not to cut the interest rates as much as they desire to on the deposits. So this, having said that, I think some of the monetary measures, some of the fiscal measures are helping to achieve a good credit growth, which I believe is sustainable, maybe in the range of 12 to 14%, the system level credit growth.
12 to 14%. On the deposit side, and I'm not asking you this as a SBI specific question, but broadly speaking, at the macro level, at the policy level, is there something that you feel needs to be done? Because I would say, and you are the expert on this, that it seems to be that there is a bit of a structural break with the past behavior of fixed deposits. Although by quantum they still remain the largest, there is a trend shift that seems to be happening. So does the system need to respond differently?
Yeah, this I'm sure there's many a time I spoke on this. The structural shift which you mentioned is definitely happening, and as the economies mature and the households, individuals' ability to access various non-banking financial savings instruments, this structural shift is definitely here to stay. How banks have to structure their balance sheets now with this, in my view, I think the shift is almost irreversible. There could be some flows happening, the equity market is doing well, there will be larger flows, or if not doing well, smaller flows, but flows definitely will be there. If you see the bank deposit growth at 1x, the mutual fund growth rate is 3x, yes. Right? So, which means that the banks probably have to access the markets more in terms of funding their asset growth. Some of this money which is moving to pension funds, mutual funds, insurance, definitely has to come back to the real economy and support the banks raising the capital, particularly from the debt capital market.